What is going on, Future Focus family? My name is George. We talk about investing on this channel, and today I wanted to talk to you guys about what's going on in the market, cryptocurrency wise, stock market wise, and try to give you a better perspective on how to invest going forward. There's a lot of things that are keeping the market going up and down and sideways and all that. There's a lot of fear in the market. You could tell that through things such as the VIX, but with all that said, let's get right into it. As always, the first thing we're going to do is start off by looking at what the market is currently doing right now. So the Dow is currently up 0.58%. However, that's still down from the day. So it was up over 1%, a full percentage point earlier. The S&P 500 is down is up, 0.66%. The NASDAQ up 0.91%. You have oil that's come down off that $103 mark it was at for a while. It's at up today 6%. Gold is up 1.7%. So it's odd to have a day where all of these right here are up. Let's see what crypto is doing. So the Bitcoin is up above that 40,000 slightly. It fell below that yesterday, but it's slightly above that 40,000. It's up 0.47%. You have Ethereum that is up 1.26%. XRP, which is a fan favorite, is up 1.04%. Bitcoin Cash, Litecoin Monero is up 4.4, beating the market. And a lot of this has to do with inflation. With all that said, let's go right into the news. Let's look at what some of the stocks are doing today. You have the ones that are leading the way right now is Marathon Oil, and that's going to be up, of course, because like all of these right here, the energy sector is going to be up because oil is up right now. So you have Marathon, FANG, the company, not like Facebook, Amazon, and all that. You have Occidental Petroleum is up, and you have Marathon Oil. These are the ones at the bottom of the list. So you have Twitter Inc., which is coming down because, of course, Elon Musk, there's news that says he wasn't going to be part of the board, and a lot of the stocks went up. Twitter went up because people thought he was going to be part of the board and enact a lot of changes. And that kind of fell apart this weekend when he started tweeting a lot of different things out there. One of the things that I saw was tweeted was, how about we remove the W from Twitter? And you know that, I don't want to say it, but you know what that would be called if they removed the W from Twitter. But that's something that he tweeted out. And I think that kind of scared the rest of the board away. And they're like, you know what? I think it'd be better for everybody if you did not become a part of the board. So you have CarMax Inc. that is down more than the rest of the market. Let's see what else is here. So you have some of the most active stocks today. You have AT&T, which is down. It's below $20, which it hasn't been below $20 in a long time. You have AMD, which is continuing a slump. It's down $96, 1.2%. You have Apple up today, being one of those defensive stocks, which a few years ago you wouldn't have thought that, but Apple is actually acting like a defensive stock. You have Neo down here, which is down slightly. This is just the most active stocks today. These are the ones right here with unusual volume today. So you have WHIP, you have Tush, you have the KMX. This one is down 24%, MYOV. So just keep an eye out on that. This is one of the speculative ones, but let's take a deeper look at it. It's Myovant Sciences. It's a United Kingdom based pharmaceutical company, and those pharmaceutical companies can be the best of you or the death of you. So that's just something to keep in mind there. This one's down really heavy today. This usually happens when the FDA says they're gonna, they're looking at approving something, and then the stock usually jumps up heavily. Like, let's look at the last month. So let's take a look back. So it's not even coming from the highs, but you see the volatility here, up and down, period of consolidation. We could take a deeper look back. Let's look at the 1-year chart. You can see it was trading up here, but usually it goes down and down on the FDA saying they're not going to approve a specific drug or approve something. And that's when things really go back for some of these companies. So stay wary of that. This is not a type of company that you want to invest a lot of money in. I'm not saying don't invest in it, especially being down 24%. Buying calls on this, being that you've seen the volatility, that it does tend to shoot up and shoot down and shoot up when it's oversold like this, and it's kind of trading like above, slightly above where other periods of resistance. Um, it could shoot back up 10% tomorrow. So buying a call option would be something you could do, but I wouldn't be a long-term investor in this. As you can see, at one point, this was about $5.45, even lower, $4.44. And this stock could easily go back there. All right, so some of the news today, the U.S. stocks, they rallied today as the CPI report boosts hope of ebbing inflationary pressures, and inflation is weighing high on investors during this time. So the U.S. inflation rate leaps to 8.5%. The CPI shows as higher gas prices slam consumers. As you can see in the picture here, $5.84. $6.04, and that's not even showing you diesel. Diesel's on a huge run. All right. The stocks are rebounding on hopes of inflation is peaking. People are thinking like this has to be the top, but it doesn't have to be the top. Like, don't be fooled. Stocks rose Tuesday, boosted by data showing that so-called core inflation rose slightly less than expected last month. The Dow Jones Industrial Average gained 241 points. We already covered that. Consumer prices for March increased 1.2% month to month and 8.5% annually. The Labor Department said on Tuesday, but traders were focusing on the core reading, which excludes food and energy prices. Core CPI in March increased 0.3% below the consensus economists estimated from Dow Jones of 0.5. So it did come underneath estimates, but it wasn't by that much. It was only by 2 basis points, 0.2%. Core prices on an annual basis were up 6.5%. Here they say it's a red hot number, but the market's reaction for now suggests it's priced in, especially with the month-over-month core reading coming in below expectations. The 10-year Treasury yield retreated from a 3-year high following the report, as traders were betting the core reading could mean inflation is showing signs of peaking. But it doesn't have to be peaking. It's just showing signs of peaking. So there's two sides of the coin right now. So right now, some people are thinking that inflation has reached the highest level that it can. And even if it goes a little bit higher than what it is now, people like Tom Lee, who is the head of Fundstrat Research, he's been bullish and he's been right most of the time ever since the bottom in 2020, in March of 2020. He's been mostly right. And what he's saying right now is that his research is indicating that even though we have a lot of stuff that is going on in the market right now, that inflation has peaked, and with everything going on in Ukraine, that all of this has been priced in. So that's something you need to take a note of. Saying that when the February, that when we hit that bottom there, he's saying that is the bottom for the year. Of course, there's other people on the other side of that saying that there is no way that's the bottom with everything that's going on. So you got to play it safe. What am I doing? Like I told you, I've been telling you guys every single day, this is not a time for me to jump in. I don't care if I don't get the bottom. I just don't want to get it where I think it's the bottom and it continues to slide down. Microsoft spiking 1.6%. So the news is positive, and people will be very happy to see that auto inflation bubble start to dissipate. But a 6.5% core inflation number is very hot, and the Fed is still going to be aggressive this year, said Adam Krusfuli, founder of Vital Knowledge. Perhaps if energy prices die down and other categories moderate for months, the Fed policy guidance will begin to ease. But for now, status quo is tightening. So another part of this is that, yes, even if prices come down, we still have the Fed fund rate that has increased exponentially. So the Fed fund rate is up almost at, it just hit 5.5% for mortgage rates, which is, people thought, 5% was high. Now we're at 5.5%, on our way to 5.9%. So even if prices begin to come down, which means inflation is coming down, on the other side of that, the Fed has vowed that they will rate hike at least 7 times throughout this year. Coming in May, we might see a 0.50% basis hike, so half of a full point, which was a lot more drastic than people have been expecting. So just there's a lot of other macroeconomic things we need to take account of if you're trying to invest. All right, so inflation picks up steam, intensifying pressure on Fed to rates. Like we said, they're going to raise rates aggressively. Consumer prices surged at an 8.5% annual pace in March, a breakneck pace as the Russia-Ukraine war drove up the price of oil. Like we said, today it's up 6%. The jump in prices marks the seventh straight monthly increase in the annual pace and the fastest inflation the U.S. has seen. So sticker shock, the consumer price index rose 8.5% in March, the seventh straight increase in the annual rate. And the market is celebrating that right now, which is kind of backwards. March's 1.2% increase marked a significant jump from February's 0.8% pace, and both the month and annual rates surpassed the forecast. Gasoline, shelter, and food costs contributed the most to the headline inflation in March, with gas prices rising 18%. And so we got that 8% increase, right? That's not real rate. That's not the real rate. Whenever you do a real rate, you also have to add inflation. So that 8%, 8.5%, when you add inflation, it's going to be at like 14 or 13%. So we're like sitting at 13.5%, and people are celebrating that. There's always the real yield. So keep that in mind. Um, if you don't know, last week in Miami, there was a big conference. So Bitcoin investors are more bullish than ever after a big Miami conference dedicated to the cryptocurrency. There was a lot of big speakers there. Kathy Wood was there. Michael Saylor was there. You had Mr. Wonderful that was there. A lot of great news that came up from that. But a lot of it was buy the rumor, sell the news. So what that means is that leading up to the meeting, prices in the Bitcoin and Ethereum and Cardano, they all jumped up. And as soon as the Miami conference started, they all started coming down, and Bitcoin went under 40,000 shortly after that. So that's something to keep in mind. And so we have two strong buys, stocks drawing interest from insiders. This was just two stocks that were recommended here. I'm not recommending these stocks. It just figured it'd be something cool to share with you guys. One of them was Energy Transfer. And they say here, we'll start with Energy Transfer, ticker symbol ET, a midstream company in the oil and natural gas industry. And midstream just means they're not the ones that are fracking it. They're the ones that are delivering it. And Energy Transfer, one of the largest American midstream firms, boasting an asset portfolio that spreads across 41 states and Canada. And the Dallas-based company has an international office in both Calgary and Beijing. The company's assets include pipelines, terminals, and process facilities. Rising fuel prices have helped ET's bottom line. In the last reported quarter, fourth quarter of 21, the company showed top line revenue of $18.66 billion, along with an EPS, earnings per share profit of 29 cents year over year. Those numbers translated to a gain of 86% and 52% respectively. For investors, a key metric is the company's distributable cash flow. And these are not only positive figures for the company. Turning to the insider trades, we find that the board members, Michael Grimm, recently made a head-turning informative buy. He purchased a total of 504,600 shares, and he shelled out $5.657 million to pick them up. And that's something that people look at a lot. Like, what are the insiders doing? When an insider buys shares of that company, that's when they end up making a lot of money. So one of the things here to look at is this is insider trades. Like, this is what the insiders that are buying. And it tells you right here what the ticker is, what the company is. So, like, for example, this right here is Sonic Automotive. Mr. Paul P. Rusnak, he's a 10% owner of the company, and he bought 127,475 shares at a price of 41.89. And then if you see underneath, he bought another 3,793 shares at a share price of $41.05. So that shows you that he's optimistic. Right underneath that, you have Mainstay Mackey Defined Terminal Municipal Opportunities Fund. So you have two portfolio manager and a portfolio manager down here. They both executed buys, one at $17.90, one at $17.89. One of them bought 10,000 shares and the other one bought 2,000 shares. So that means they're bullish on it. Then you could come down here and see right here, Target Corporation. You have the executive officer of Target selling for $219 and $233 on two separate trades. He sold 18,674 shares and 8,500 shares. Now, does this tell you everything? No, maybe he needed money and he wanted to invest in something else, or maybe he wanted to buy a house or something like that. But this could be like something that is not the most bullish thing for a company when you see an executive officer of it selling this many shares. And then you have, like, down here, the director of Harmony Biosciences selling 5,000 and 5,000, so over 10,000 shares at a $50 share price. It could kind of give you the impression that this is not one of those things. So not one of those things you want to be investing in when those people are trying to sell. The other company here that they were talking about was Dave & Buster's. That's one of the places we're actually going to go to this week. And shifting gears, we'll move over to a leisure and entertainment, where Dave & Buster's has long been a popular name and venue known as both a full-service restaurant and a bar. We all know what Dave & Buster's is. So a few numbers will tell the tale of success. The company posted heavy losses in the corona pandemic year of 2020. Revenues fell to just 436 million, but came roaring back. And the top line for last year came to 1.3 billion. So that's something. In measure of confidence, the company earlier this month announced that it will be acquiring the family entertain chain Main Event. The transaction will cost $835 million in an all-cash deal, so no stocks involved. So they're actually making an acquisition, which is big. But when an acquisition is made, you need to ask yourself, how long is it going to be until they make their money back, and is it worth it? The company's recent large acquisition has Wall Street's analysts thinking about plays forward growth. All right, so that's one thing. That's another one. It's currently listed as a strong buy. So you do your math. The highest price target on it is $63, and it's currently sitting at 56.71, which gives it a 32.72% upside. And the average is a 56.71. You have the low of $42. So just think about that. That gives you kind of increase of where it could be. You have 0 selling, 2 holding, and 6 buyers of it. And these are some of the people who they are right here. Just 2 ideas right there. So you have ticker symbol ET and ticker symbol play. Some 2 stocks for you guys to look at there and give your consensus on. But as of right now, I'm sticking to my guns. I am not making any big purchases. I am not selling. I'm just staying the course, and I'm stacking up cash for big opportunities in both the crypto market and as well as the stock market. Also doing research on the side for duplexes and fourplexes to invest in. And right now is not the time to buy anything. My strong case right now is that we are in a bear cycle, which means the market is technically going down. However, we are going to have a bunch of green days. This is like a perfect environment for traders, day traders, swing traders, people who are like buying today because the market's going to buying, hoping it goes down today so they could go up tomorrow and make some money off the trade. Options traders are making a lot of money during this time if they're picking the right side, of course. So this is a trading market. This is not time to pick your long-term winners, because I think you're going to find that a lot of these stocks are still going to continue to go down as inflation goes up. I hope this all helps. I hope you enjoy this content. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. It literally costs you nothing. Until next time.